Welcome back. Let's talk about what's going on in the crypto market today. Because wow, there's a lot of red on the screen. The fear is pretty thick right now. Ethereum in particular has taken a really sharp dive, and it's smashed right through some key support levels. Now, while pretty much everyone is sounding the alarm, we found one analyst who's looking at the exact same charts, and they're not seeing a crisis. In fact, they're seeing what they believe could be one of the biggest buying opportunities of the entire year. So today, we're going to break down that completely opposite case step by step. All right, so here's the game plan. First, we're going to look at the price drop itself, the numbers that have everybody so worried. Then, and this is where it gets interesting, we're going to dive into the technical charts to find the hidden signals that suggest a big reversal could be just around the corner. After that, we'll zoom out, put this drop into the bigger picture, and then we're going to investigate a massive, and I mean massive, $8 billion bet against Ethereum. And finally, we'll get to the analyst's incredibly bold predictions for where the price is headed next. First things first, let's not sugarcoat it. We have to look at the damage and really understand why so many investors are on edge right now. The numbers are definitely not pretty, and the fear out there, it is absolutely real. So, as of November 3rd, Ethereum is down a hefty 8% just for the day. Now, this isn't just some small dip. This is a really decisive break below that psychologically huge $3,600 level. That's a price that a lot of people, a lot of traders were really hoping was going to be a solid floor of support, and it wasn't. And listen, this isn't just an Ethereum problem. The pain is being felt all across the board. The average altcoin is actually down even more, almost 9%. And even the king, Bitcoin, has shed over 4%. What's really telling, according to this analysis, is that a huge chunk of this sell-off happened incredibly fast, like in a flash, right after the U.S. stock market opened. That suggests this might be tied to some bigger jitters in the traditional markets, too. So you see this, right? The charts are bleeding. Your portfolio is taking a hit, and that immediate gut punch feeling is, well, panic. The question on everyone's mind is the same. Is this it? Is the bull run over? Are we about to see an even bigger crash? That's the question that is absolutely dominating the conversation right now. Okay, so now let's flip the script. This is where the analysis we're looking at directly challenges that feeling of panic. Instead of just staring at the scary red candle on the price chart, we're going to shift our focus to the underlying technical indicators because they're telling a completely different story. So this next part is super, super important. We need to understand a concept called bullish divergence. It's a classic signal that chart analysts look for. Think of it like this. Imagine the price is a car that's rolling downhill, picking up speed. It looks bad, right? But while the car is still moving down, you can suddenly hear the engine starting to rev up, preparing to accelerate uphill. That engine revving, that's the indicator. It's telling you that all this downward momentum is actually running out of gas. And this creates such a fascinating contrast. On the surface, what everyone sees is just fear. The price is hitting new lows, and people are getting more and more scared. But underneath all that noise down in the data, the indicators are whispering the exact opposite. They're suggesting that momentum is secretly built. They're chasing the price down, betting on a further crash right at the moment of what looks like maximum panic. And this quote, well, it's a direct challenge to that $8.1 billion. See, when a market gets this lopsided with so many people betting on one outcome, it becomes incredibly vulnerable to something called a short squeeze. If the price suddenly reverses and starts moving up, all those traders who bet against it are forced to buy back their positions to stop their losses from getting bigger. And that forced buying just adds more fuel to the fire, pushing the price up even higher, even faster. It's a chain reaction. So, with bullish divergence flashing on the charts and a market that looks absolutely primed for a potential short squeeze, where does this analyst actually think we're going from here? Let's take a look at the specific price targets. And I gotta warn you, they are not shy. They are incredibly bold. Okay, so the prediction here isn't for some small, timid bounce back to where we were. No, the call is for Ethereum to not only completely erase today's losses, but to surge to over $4,000 by the end of this week. And looking further out, the targets get even more wild. $8 to $10,000 by the end of 2025, and a potential cycle peak of anywhere between $14,000 and $27,000 by mid-2026. And this right here is the core thesis. The idea that everything we've seen so far, even the previous all-time highs, was just the opening act. This violent shakeout is being framed as the final necessary evil before the true explosive face melting part of the bull market rally actually begins. So, let's bring this all home. Let's synthesize everything. We've seen the ugly, fearful price action. We've looked at the hidden bullish signals under the surface, and we've heard the absolutely sky-high predictions. What this all boils down to is a fundamental clash of narratives in the market right now. Right now, the market is truly a tale of two completely opposite stories. On one side, you've got the bears. They get extremely loud during drops like this, flooding social media with scary-looking charts that seem to prove a massive crash is guaranteed. And on the other side, you have this contrarian view, an analyst who believes that the time to be the most bullish, the most vocal, is precisely when everyone else is running for the exits. And this is the analyst's final direct, unambiguous piece of advice. The argument is that selling into this wave of panic right now at these prices would be the single biggest mistake an investor could possibly make for the rest of this year and well into the next. The advice is brutally simple. Just hold on. Do nothing. Wait for this storm to pass. And really, that's the question this entire analysis leaves us with, isn't it? It's a classic investment dilemma. It pits our logic against our most powerful emotions. Does a market that is dripping with this much fear and panic represent a true danger signal you should run from? Or does it, as this analysis so strongly suggests, represent the moment of maximum opportunity? The answer to that question will probably reveal itself very, very soon. Don't forget to subscribe, and thanks for watching.